Hello, hello, everybody. How are we doing this morning? It is an early Tuesday morning, 8 a.m. Eastern Time, 6 a.m. Mountain Time. I'm here in Colorado, so it's quite early for me. Tuesday morning, we've got CPI today. This is why we are live. How are you guys doing? I hope you guys are doing well. I'm doing all right myself. Had a little bit of a late night. My sad dog is very sick, and so I was having to help him. But yeah, we're here. Good morning, MG. Good morning, Mr. STFN, Mr. Stiffen. Jose Gomez, what up? How is everybody today? Where are you guys tuning in from? Good morning, good morning, good morning. We're gonna get into some analysis here, but I have to admit I'm a little woozy this morning, a little tired. So I'm just getting into the swing of things. I was catching up on some of my morning stuff. Stefan from Belgium. What's happening? What's happening? Yeah, we're just waiting for the CPI number. We're going to get that number here in about 29 minutes. I don't know if you guys have like morning routines. MG from South Florida. What's happening? Hope you're well. But every morning, you know, I get up and I look at charts. I read different friends' writings. Have a handful of friends who release daily notes, market notes. One of my buddies, Mr. Andrew O'Connell from Pristine Cap, great dude, super smart. I love reading his work. He posted this today. This is, really wild kind of what's going on. Everything with the banks. I'm sure, I don't know about y'all, but my head is kind of spinning from all the things that are going on with SVB last Friday and everything with the banks, and now how the Fed, the expectations out of the Fed and how they're going to be changing the rates going forward, how those expectations have changed. This Fed funds rate is pretty interesting. While the discussion last week was whether or not we would get a 50 basis point rate hike, and remember, it was a very high percentage chance. It was 66-70% chance that they were going to hike 50 bips at the March 22nd meeting here in a couple of weeks. Markets are now pricing in a 65% chance of a 25 bips rate hike, so that's reduced by 25% or 25%. Or I'm sorry, 50%, and a 35% chance that the Fed doesn't even hike at all. That's crazy. This is crazy. Looking beyond the March Fed meeting, expectations for future rate hikes have absolutely collapsed over the last few sessions. Looking out to March 24, the markets were pricing in a Fed funds rate of 5.365 3 trading sessions ago, and is now pricing in 3.77%. So whether we will be continuing to hike, whether we will be now, or whether they will now be maybe, reversing those hikes and reducing, kind of interesting to think about. I also, of course, I scroll Twitter and I look for, interesting hot takes. Bob Elliott is a brilliant guy in the space. He has tons of great takes, and I kind of specifically was interested in his take, and it's kind of his take against these ideas about these rates being slashed going into the coming year. That's some time away, but still pretty interesting. So price switched from hikes to cuts in 72 hours, signaling small bank stress is enough to derail the macro strength. That's an interesting thought, right? Jerome Powell must be considering lessons of 1998. Now, I was not trading in 1998. Maybe some of you guys were. I was not, so I'm learning about this. But Jerome Powell must be considering lessons of 1998 right now, when a financial panic drove Fed cuts and extended the tech bubble. Except this time the costs are higher. And here's his thread, and we'll kind of go through it. What we are seeing right now with the small banks is pretty normal in any traditional macro tightening cycle. The rise in rates not only has an impact on the macro economy through higher cost of credit, etc., but it also exposes those most sensitive to rates and liquidity. This time we are seeing the tech sector, but in the past it's been housing or tech actually, or SNLs or commodity producers, etc. Each time has a different flavor, but the story is largely the same. When this happens, the central bank has to make a call about whether it is enough of a tightening of the private financial sector to derail the strength of the macro economy. Back in 98, the trade-offs were a little easier for the Fed. Despite the economy being pretty late cycle and UE being low, reported inflation was pretty contained. When long-term capital management broke, LTCM, the Fed, there wasn't much immediate cost to respond with liquidity. But LTCM wasn't big enough to derail the macro economy strength. It looked like it could be an existential threat, but it wasn't. Heck, most people outside of the financial system had no idea that was going on. You could argue that's true today too. I'd be curious to know truly how many people are really know what's going on with SVB and some of these other banks. But what did impact pretty much everyone was the cut in rates and the easing of liquidity. And this is where it gets kind of interesting. In all sorts of ways, the liquidity that was injected helped support the last 18-month leg in the bubble and another 50% rise in stocks. Today, the Fed faces a similar late cycle financial problem, one that needs to be addressed. Otherwise, it could create a systemic risk, but not one that on its own is systemic in size. The steps done so far have likely curtailed the panic risk, though a few more banks may fall. But the bigger battle remains on inflation. Assuming this doesn't leak into a broad set of lenders, then the macroeconomy looks not much different today than it did a few days ago. It's true. Yet a halt to hikes and cuts are being rapidly priced in. This is what we just talked about. The abruptness of the move, plus the fact that funds were significantly short bonds and short rates coming into this period, suggests that we may be seeing a pretty big de-risking, short squeeze, rather than a careful repricing of expected path of policy. That is kind of key, huh? Just like the bond rally in January, these types of moves in many ways sow the seed of their own reversal. The lower the mortgage rate, the more stimulation. And the more work the Fed has to do to get the macroeconomy to slow down to beat undesirably persistent inflation. While we aren't sure exactly how this will all play out, I'm sure Jerome Powell is thinking hard about 1998 and the consequences of running easy policy in a late cycle environment. The best path is pretty clear. Keep tightening to slow the real economy while providing the necessary liquidity and capital to make sure the financial system can withstand the shifts in policy. The stakes are pretty high and right path for policy is pretty clear. What JP does will reveal a lot about how policy will be run in the months ahead. Until now, the trade-offs were modest. Today, they are not. We will soon see whether Jerome Powell really is an inflation fighter. Pretty strong words from Mr. Bob E., Mr. Bob Elliott. What are you guys thinking? I see Jose. I see Bitcoin and gold. That's your response here. Let's see what Stefan's saying. McClellan Index is very smooth about market timing. My opinion looks like I can't find it on TrendSpider. Last night, the Nazi on stock charts. I'm not sure what that means. McClellan Index. I'm not sure if that's an indicator that we have. I've heard of it. We have the McGinley Dynamic, but not the McClellan Index. What we can do, my friend, let's request a feature. Indicator. Would be nice to have. I absolutely need it. McClellan Index. Description of feature being requested. Please tell us. Well, I'm not really sure what the McClellan Index is. So we're just going to copy paste. Let's go hunt down something about the McClellan Index. Is this it, the McClellan Summation Index or the McClellan Oscillator and Summation Index? I'm guessing these are the same thing. Let's just grab this. Copy pasta. Right here. Paste. Do you use any other trading platforms? Do you use any other trading platforms? Well, you said stock charts, so we'll say yes. Would the addition of this feature be sufficient for you to only use TrendSpider going forward? Now, that is a question. Mr. Stefan, if we add this, are you only going to use TrendSpider going forward? We'll say yes. We'll give you the benefit of the doubt. Would you recommend TrendSpider to a friend? Absolutely yes. And submit. There you go. Feature requested for you, sir. Now, I can't guarantee when it might arrive, but, you know, we got to try. You only use TrendSpider. Okay, perfect. Well, we're going to give it a go. And also what I'll do when I get off of this live stream, I will, yeah, of course, no problem. When I get off this live stream, I will hit up our development team and personally make the request as well. Again, you know, no guarantees. Those guys are a busy bunch and they're working on things that are always very important. So sometimes requests get filled very quickly and sometimes it takes some time, but we will definitely do our best. What do you guys want to look at this morning ahead of CPI print? Anything in particular you guys are curious about? Any questions about the platform that you have for me today? Anything you're having trouble with? Do we have any new users to TrendSpider here? Do we have any folks who are not TrendSpider users here? I know that was a ton of questions, but you know, I hit you guys with a ton of questions. I figure at least somebody will respond with some sort of answer, right? I've got the new data flow widget here up on my screen. And the reason why I have it up personally, the reason why I like it, is I can just very quickly and easily see where action is. Some folks really like unusual options and they utilize unusual options to make a determination about where to put their eyeballs. So I've got an unusual options widget up here. So it's just giving me, you know, you can kind of sort this in a lot of different ways. I generally will just have it sorted by date and time. So I can see kind of immediately what's coming in. Excuse me. But you could sort by premium, you could sort by size, you could sort by open interest, strike price, type, days till expiry, and so on. What are my 3 favorite indicators in my overall charting? Jeff Vance, great question. So it kind of changes with time. The guaranteed always going to be present on my chart in some way, shape, or form is going to be volume weighted average price. I can't really live without volume weighted average price. Now I use volume weighted average price in a handful of different ways. Most of the time I'm using it, I'm using anchored versions. So an anchored VWAP, whether or not, I'm not sure if you're familiar with that indicator. I don't want to go too far in detail with it if you're not familiar with it, but volume weighted average price obviously is just is exactly that, right? It's your average price weighted by volume. Anchored VWAP is a volume weighted average price anchored from a particular point in time. So whenever I'm analyzing a chart, I definitely want to know where my average buyer is relative to what's interesting to me on the chart. If I'm looking at JPM, for example, JPM and all of the banks in particular, one thing that I would do for all of these banks, if I was thinking about trading them, I would take the move from the begin. I would anchor a VWAP from the beginning of the move that started whatever it was, a couple sessions ago. I guess it was on Friday, on the 7th. So I would anchor a VWAP from the start of the move. And why do we do that? Well, very clearly, this is why we do that. Whenever you anchor a VWAP from the start of a move, it could be an earnings move. It could be like a gap up or a gap down on earnings. It could be a relative high. It could be a relative low. It could be an IPO date. It could be all kinds of different things. You know, VWAP resets every single day. Anchored VWAP never resets. You just anchor it and it just draws and draws and draws. Murder Red, SPX index in particular, are all on a delay. There is not a way to get real-time SPX. You would just want to use ES futures, or you would want to use SPY. Indexes themselves, SPX in particular, is always 15 minutes delayed. But Jeff, getting back to your question, so VWAP is one for me that's really important. Depending, like recently, because on the daily, because we've been coming into 200-day moving averages, kind of on all the major indices, on a lot of important names, the 200-day is more of a self-fulfilling prophecy type of indicator for me than anything. I don't really pay much attention to it unless price is really close to it, and I only pay attention to it then because traders are looking at it, and I know traders are looking at it. I know everybody's looking at it. So I usually will have it on my chart. I have it on my chart right now because, again, people are paying attention to it right now. So it's important to me. And then third, the one I can't live without is RSI. I usually am trading somewhere around the 15-minute time frame. That's usually my preferred time frame of choice. But I will always be going down to smaller time frames. Once price gets to a level of interest for me, I'm always going down to smaller time frames to look for confirmation of my trade idea. One of the best ways that I've found for that confirmation is RSI, specifically RSI divergence. So we're looking for, if I'm looking for price coming into a low and looking for a potential long opportunity, I'm usually looking for new lows against higher lows on RSI. Vice versa, when price is coming into relative highs, I'm looking for higher highs on price with lower highs in RSI. I'm looking for those divergences that kind of let me know that as price is either making new highs or making new lows, that the move is weakening or strengthening, one of the two. So I'll use that as just an additional signal to help guide me in that way. So yeah, VWAP, RSI, and probably the 200-day moving average, honestly, right now. And like I said, that 200-day moving average will say that changes often. Let's see here. How do you choose the date of start of anchoring the VWAP? Is it sliding the dotted line to the left? So what you're referring to, I believe, is you're referring to the volume by price. Volume by price has the slider bar. Is this what you're referring to, Jeff? Let me know if this is what you're referring to, and then we could talk about, again, why and how I choose. Murder, you know, honestly, I wish that I knew. I wish I knew. These are things that are kind of outside of my, I don't want to say pay grade, but they're just outside of my world. I know that some data, and it could be true with index data. Like, for example, the DXY index, the dollar index, that data, just to receive that data is wildly, wildly, wildly expensive. You would be shocked if you knew how expensive it was. I'm not going to get into the details of how expensive it is, but I actually think that that's probably about what it is. In the future, I know that we plan in the future to add the ability to pay for extra data, you know, things like indexes, things like other countries, exchanges, those sorts of things. But unfortunately right now it's just not available. And I wish I had a better answer for you. But that's the answer that I've got for now. Like I say, yes, ES is going to be probably your best proxy. Let's see here. Murder, I mean, we could definitely put in that request for you. Absolutely. Let's walk through that real quick. I'm going to let you do it this time. Go up to your name and then just go down to request a feature and then fill out this stuff. You would say, in this case, you would say other, and you would say SPX index, real-time data. And then just go through the rest of it. I do believe that's something that we'll add in the future. It's just not something that's available right now, unfortunately. So, all right. So Jeff, this is anchored, right? Just by moving it around, we're anchoring it. So you can choose to anchor this different ways. Right now I'm anchoring it manually, right? Like I'm dragging it manually and moving it around. Ooh, we got to get this ad off of here. Hold up. What are we doing? Oh. All right, music is back. If you go into the indicator itself, click on the three dots here, and go to your anchor to, you can choose highest volume, highest high, lowest low, blue raindrop, recent gap, day to date, week to date, month to date, quarter to date, year to date. How do you choose which to anchor to? It's a fantastic question, and it's why I generally only utilize manual anchoring, because every stock is different, every idea is different, and therefore every place I want to anchor from is going to be different as well. When you pick a very specific thing to anchor to, specifically like day to date, week to date, month to date, quarter to date, year to date, these options are great for use in the back tester, rather in the strategy tester. I utilize like week to date, month to date, year to date VWAPs and the strategy tester a lot. You can put them in what we call continuous mode, and you'll see it when you try to utilize these in the strategy tester. Let's say you're trying to back test an idea, and if you guys want to, we could play around with it. Actually, let me just do that so you guys can see it. When you go and you utilize and you say, I want to be long when price is above the weekly VWAP, and I want to not be long when price is below it, right? I want to get out of the trade when price is below it. If you just want to like back test something like that, the way that you would do it, you'd say price close greater than indicator VWAP, or rather anchored. And we're going to use anchored VWAP, just this first basic one here. And when we click on this, we have to choose what we want to anchor to. So I'm going to say week to date. And then you have this continuous option. So we select that. And why do we select that? The reason why we select that is because if we just anchored, if we didn't select that, it would anchor to Monday and then it would stop, right? What we wanted to do is we wanted to anchor to Monday, go to Friday, and then on Monday we wanted to re-anchor and go to Friday, right? Because we're wanting to backtest that in perpetuity, or we want to see over a long period of time. So we want to see every single Monday it re-anchored. So that's why we would use that continuous idea. And you could set this to continuous. I believe you could set it to continuous on the chart too. Maybe you can't. Let me go to a week to date. No, I guess you can't. I'm actually, let me see something here. Let me go to a daily. I think it automatically does it. Excuse my my not being 100% certain on this. There it is. Hold on 1 second. Oh, here it is. Yeah. So here's that same VWAP. This is a weekly anchored VWAP, a continuously weekly anchored VWAP, right? So every Monday it's re-anchoring, 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 re-anchoring. So you can test these sorts of things. As far as like when you're using an anchored VWAP in this way, then it makes a lot of sense to anchor to a specific day, week, high, low, whatever. But what I've found to be best for me just on a regular basis is anchoring to what I deem to be important. In most cases, that's going to be a relative high or a relative low. However, when you choose that auto anchor point, let's say we want to anchor to the highest high. You have to choose a window. And what is a window? A window is a period of candles surrounding the high that define it as such. So if you have a window of 20, you have a highest high, right? And your window of 20 is 20 candles surrounding the high that make it the high. So you have 10 candles on the left, 10 candles on the right that don't have a higher high, right? Well, that high may be valid for JPM, but it may not be valid for BAC or for Wells Fargo or for Signature Bank or whatever. It may be totally unique for JPM. And so that's why for me, it's just easier and makes more sense to anchor manually. And I'll do that just via right-clicking. Right-clicking on a candle of interest. For example, let's say this October 24 low. So this is last October low. Last October lows were the lows for many names in the market. For me, that's a really important spot. So I'll anchor to it because you'll see why. I mean, you can really see why. It's impactful when price is pulling in. If you go and you look at just anything, go to SPY and anchor to the October lows. It's a good gauge of kind of where we're at relative to those lows. So that's kind of how I think about it and how I manage it. Does that give you a pretty decent understanding of how this works? Did I explain that well? It's early for me, so I might be a little bit slower to the gun than usual. Any questions about that, Jeff? I want to make sure that you fully understand how to utilize it, because these things are damn powerful. Our buddy Brian Shannon is on to something. What's up, Jay Rambo? How's it going, man? Good morning. Hope you're well. Murder, I wanted to ask you too, did you get sussed out? Do you understand what's going on with Signal Stack now? How to connect your broker and all that stuff? I found another video online that I think could be really helpful for you if you have not yet figured it out. Also, you guys, we got just a couple of minutes left. What's up, Robert? Good morning, man. We got just a couple of minutes left. I want to make sure that we're on top of watching all the things you guys want to watch. So hit me with all of that. Let me know what you guys want to watch this morning, because we are about to get results here on this CPI number. Expectations were, I think, as a very slight drop. It was like 0.4% increase month over month. Last month came in at 0.5% increase. But do you guys have symbols you want to keep an eye on? Hit me with symbols you want to watch. Murder, hit me up with your email address and I can send you something. I can send you a better explainer video too. If you want to, if you're on Twitter, Murder, hit me up on Twitter in my DMs if you don't feel comfortable sharing your email address here in chat, and I'll message you. I want to make sure you understand. We're on Twitter, Krutzky Trades, at Krutzky Trades. It's right here in the bottom. Awesome. Yeah, hit me up there. I actually reached out to Rambo the other day because for some reason I was thinking it was Rambo that was asking about Signal Stack. Coin, cool. Let's throw coin up there. Yeah, crypto's been ripping, huh? Hold on, let me throw up. I need to put up after hours data. My bad. I didn't have any after hours data going. That ain't gonna help anybody, is it? So I've got everything on the minute time frame just to like make sure we can really inspect and watch. But if you guys want to use a bigger time frame, we can. Yeah, I hit up Rambo because I thought it was Rambo asking about Signal Stack. So Rambo, sorry to randomly drop into your DMs. Any other symbols you guys want to watch? You guys are usually you guys usually know exactly what you want to watch. We want to watch Apple maybe. Well, deep dive. It's really up to you, man. I generally tend not to use after hours data when I'm in the strategy tester. But, you know, if that data is important to you, then sure, use it. I tend not to use it though because it's low volume and you know, oftentimes prices get corrected over the course of an after hours and pre-market session. I think what's most important is the daily closes. All right, so initial move is lower. Looks like they're buying it back up a little bit here. What's the word? How did it come in? Let me pop into Twitter and see real quick. February CPI year over year, 6% versus 6% estimated. So it looks like in line year over year, which is why we're rallying here. Y'all, I had bids at 12.10 on ES. And what did they come to? 12.24. Man, that would have been 200 points in a split second. That's a bummer. Don't you hate when that happens? They front run your levels. Tesla. Let me throw up Tesla. Sorry, Murder. Tesla ripping. Yeah, I mean, so far so good, right? The Qs were looking like a really nice setup. I mean, ES or SPY wasn't looking as clean. IWM obviously was looking quite weak yesterday, but the Qs were looking very interesting to me. We can kind of talk about why that's the case. But I kind of want to give it another second, another few minutes or so, and let this move kind of shake out a little bit. So they're pretty much trading exactly where they were trading before the announcement now. Man, that is a bummer that they front ran. I was so close. I was so close. 180 points. That would have been pretty sweet. That would have been very sweet. How are you guys trading this morning? Are you trading it? Are you guys shooting from the hip here? Are you the type that likes to let it kind of settle? I'm going to go down to the 6 chart view because we only have 6 charts going here. All right, so now we're selling off a little. Maybe they'll give me my opportunity after all. It's very volatile, though. I know it doesn't really look that volatile. I'm more of a futures guy, so I'm sitting here watching futures. Futures going wild. I guess I could throw up futures, couldn't I? Let's go 3-3. So this is kind of interesting. Here's your September 2022 monthly close. This has been a big level lately. And then your 38.61, your quarter 4 close. Came right into the quarter 4 close on ES. The big time frame closes and opens can be very, very important. So that's why I have them on my chart. Big monthly closes, big quarterly closes. These are all, and opens too. These are all levels that I like to keep on my charts. This is just a personal chart here. See how that September monthly level, price kind of finding some support at it. Looks like we have some sort of big level in RTY. I don't know exactly what that is, but something that I had marked. All right, giving back quite a bit of this move, huh? How much will they give back is the question. Coming into daily VWAP, looks like on NQ, kind of on ES too. What are y'all's thoughts? Murder's asking if we're bullish today. What do you guys think? Everything kind of selling off a little bit here. Maybe I'll get my opportunity after all. No thoughts today? Nobody has any opinions? Robert Brush, you don't have any opinions, sir? Pump and dump, you think? Just watching. How are you playing it? Do you have anything that you're keeping your eye on? I'm kind of curious to know what's JPM doing? $786 fib. Pre-market low to high on what? Oh, I think I know what you're saying. Let me see. Yeah, clean, huh? I see it. This is what you're saying, huh? Right here. 786, pretty steep. But they held a low. Rambo, you're bullish above 392. Let's take a look at a daily here. Bullish above 392. So what, yesterday's close, essentially, is kind of what you're after? Is that the idea? Daniel, good to see you this morning. Thanks for being here, man. I appreciate it. Man, it's my pleasure. Happy to be here. Yeah, so that kind of retrace that. Daniel, what's your experience? I play with fibs for sure. I definitely like to know where they are. I usually use them on quite bigger time frames, but when I see a 0.786 retrace, when we go all the way back, am I in any discords? Just the TrendSpider one. When I see that much of a retrace, it kind of spooks me because that's pretty steep. Like it's nice to see that they held the low. But generally on a retrace for me, link it. Sure, man. Hold on. Actually, go over here. It's actually it's right here. Join our official Discord server. It's in your account, my man. I can't recall. Murder, you do have an account with us. Yeah, right? Yeah, so you're using it as like a quick in and out, Daniel. Those fibs can certainly be powerful. Awesome. There you go, Murder. Yeah, there's a bunch of good people in there, man. A couple of the guys from the support team spend time in there too, so you can always get some help. There's another fella who comes in here. His name is James. I can't remember what his... Let me see if I can find his Discord. What is his Discord? James Freer, are you here, man? We appreciate that, Murder. That's what's up. Thank you for supporting the home team. I'm going to pop over back to the dailies here. I'm going to show y'all kind of what I was seeing. Why I was kind of specifically thinking the Qs didn't look awful. Why they looked the most constructive of the bunch. You had the regain on the 200-day yesterday. They barely regained it, but they did. On like pretty big volume. Where are we at here? Yeah, anchored VWAP from those October lows. You know, those October lows are important. Where's your average buyer from those October lows? Well, currently they're in the money on average. If you check out SPY, it's a different story. You're stuck below the 200 on SPY, and from those October lows, you're stuck below here as well, which is not the best look. Those are going to be two big spots on IWM, or actually it's the same spot. It's just two big important things that could keep price down. On IWM, it's the same deal. You're stuck below the 200 and you're stuck below the VWAP from the October lows. Again, you got to move back into this. You kind of anticipated a little bit of a rejection there. You did hold on all of them. You held December lows, which is interesting. If you're a price action trader, what are you looking for in an uptrend? You're looking for higher lows. You're looking for higher highs. In a downtrend, you're looking for the opposite, right? So you got your low, you got a high. You got a higher low, a higher high. Well, the first thing you want to see is when you come into these lows that you don't make a new one. If you want this to continue higher, you cannot lose these lows. Super important. And so far, they have not done that on any of these names, on any of the major indices. SPY, they held. QQQ, of course, definitely held. Big time held. Right? If we look farther out, another logical place, we were talking about where to anchor from, Jeff. Another logical place is all-time highs. Where's your average buyer from all-time highs? Well, on the Qs, check this out. This is cool. And this is kind of what you would want to see too. Point of control. This is where the most volume at price has occurred since the all-time highs. There's more volume on the Qs at 292 than any other price point between the lows, 251, and the highs, 408. So more volume here than anywhere else. If you're bullish on the Qs, you really want to see price stay above that level, that point of control. Because this is going to be either support or resistance, right? So price above it, we feel good about price above it if we're bullish. Because this is going to add support. You got a bunch of people who've there's a lot of what do you call it? There's like a lot of memory at this price. If you break below, this is going to turn into sellers. If you break below and you come back into it, you're going to look for this to act as resistance. And it's the same deal as the VWAP too, right? Point of control and VWAP are kind of two totally different things. VWAP is where your average buyer owns the stock from. Point of control is just where the most volume occurred. And where the most volume occurred does not necessarily equal where the average buyer owns it from. So the average buyer, we're stuck below VWAP from the highs. Average buyer owns this thing at 317, 316. So that's going to be some resistance going forward, you can see it was resistance back in February. Pretty, almost very clean resistance too. We came into it, we failed, and now we're trying to hold. So you've got the VWAP from the October lows, you've got the 200-day moving average, you got point of control, all sitting here as support. Price breaks below all this stuff, problematic, right? Problematic for bulls, not for bears. You see a totally different look here on SPY. SPY, we're below all this stuff. We're below the 200. We're below the anchored VWAP. We're below the point of control. So coming back into it is going to be resistance. You're going to have some trouble getting back into this. And the main reason we're seeing this on SPY versus on the Qs, and why we're seeing it also on IWM, is because the Qs don't have any banks. I don't think there's any banks in the Qs. So the Qs didn't get hit the same way from these bank failures. But a similar look here on IWM, right? Stuck below point of control, stuck below VWAP, stuck below 200, stuck below anchored VWAP from October lows. We could go back even farther. Another really important VWAP is your VWAP from your COVID low, where your average buyer from the COVID lows past 2.5 years of price action, or almost 3 years of price action. Where's your average buyer there? Well, we can see where they are on IWM, about 167. Or 187 rather. That's problematic. Stuck below that. And that's going to be the case, I'm pretty sure, across the board on the SPY. Okay, on the SPY, look at where we're finding support. Finding support right on the COVID low anchored VWAP. So we're trading right at it. Really want to see that hold. IWM, or I'm sorry, we just did IWM. QQQ. Stuck below it. Perfect resistance a couple weeks ago. Back in the end of January into February. Perfect resistance. Not a surprise to see it. So very much stuck, right? I'm going to pop back into smaller time frame here and see where we're at. All right, so reclaiming those highs. Man, nice trade. If you held on to that 0.786, Daniel, if you held on to that, great job, man. That's a banger little trade you just got your hands on. So what are we thinking going into the day? I'm feeling kind of mixed here. I'm feeling kind of unsure. Myself, I'm going to go to KRE real quick. KRE is regional banks. Don't know if that's something you guys are paying attention to. But it seems like something worth paying attention to, don't it? KRE, a really clean example, y'all. Like you guys know, price action guy. And I love this setup. This is like my all-time favorite setup ever. It's where I've kind of found the most success in trading, is this particular setup. It's kind of it's a very wonky looking, but it's there. It's a head and shoulders essentially. But it's price action. It's derived off of price action. You have a low. You make a new one, and then you gain it, right? You kind of gain the high that took you all the way down. And then they held all this stuff too, right? Give you guys a little lesson. So where Head and Shoulders comes from is this idea, right? You have your high that took you all the way down to your low, and then you made a new high relative to it. And we gained it. When we say we gained, we actually held above. See how they came in? They held perfectly here. They even made another new high. And then they tried to hold throughout this whole period, and then they failed. When they fail, they go down and they test. What do they test? Well, they test the low that brought us to the high that we gained. This is your low that brought us to the high that we gained. And look at where they're holding perfectly. Now, on these big, intense moves, it's not a surprise to see wick through it. You know, this is going to stop a bunch of people out. They also filled this gap right here really nicely. But you can look for this on all time frames. If you're interested in like price action trend trading, this is a really great little setup because it works in reverse too. You know, if you imagine this chart being flipped upside down and this being a high and this being a higher high, and then you lose it, and when you come back and test it, you fail. Oh, just a little price action lesson for you guys. Let's check out ES. Yeah, coming back in to those highs of the day. I'm going to go back here. Oh, I see. For those big levels that I was talking about, like that, you can see that September monthly level, even though they wick through it, you see where the closes are. It's all about those closes. We can go to the monthly and I can show you guys. Why is that level important? Because it's the close of the candle that brought us to the low. So that's why it's important. For me anyway. Quarterly. Same deal. Close of the candle that brought us to the low. So that's why those two levels are kind of important to me. You guys see that? Hopefully that makes a little bit of sense. For me, it's all about closes. We just got a couple of minutes left here before we get out of here. Do you guys have any questions? Anything you want to take a look at? Murder, sure, yeah. So again, like I said, I don't use most of this stuff. Like I have a lot of these indicators up because, you know, part of my job is knowing what's going on with more than just the way that I trade. You're welcome to screenshot this. But like I said, I don't use, most of this stuff is turned off all the time. I'm interested in relative volume simply just to get a gauge. I mean, you can gauge relative volume by looking at just volume, period. But relative volume, you could argue, is interesting. I use it specifically in the scanner to define volume without having to define the number. You know, some people may say, I only want to trade stocks that trade at least $10 million or 10 million shares a day. And that's fine. You can do that too. But when it comes to, like, for example, yesterday or the day before, I was back testing, actually on Friday, I was back testing the moves that we were seeing on the major banks, because they had these big down days. And also they had relative volume. They had really elevated relative volume levels. Like if we go to JPM, for example, like if we look at the daily, we zoom out on the daily here, see how much volume we had relative to kind of the rest of the volume is huge volume on JP Morgan and huge volume across the board on every single bank on Friday, on Monday. And what I wanted to do, I wanted to test and see. I was listening to spaces and hearing a lot of feedback from a lot of different people talking about, yeah, you know, haven't seen this kind of move in JP Morgan ever. They were making these very broad brush claims. I think JP was down like 5%, 5.5% on Friday, something like that. And people were talking about how wild that was. So I was back testing to see exactly how many times it had actually had a 5% down day. And it was quite more than you would have thought. It was like 65 times. But you see this spike in relative volume. This allows me just to define relative volume. It doesn't force me into the whole of defining the amount of volume. I can just define how the volume compared, relatively speaking. And when you combined it with relative volume, the down day plus the relative volume reading at the time was like 3. So 3x average volume. That was pretty rare. And it was pretty rare across the board. Like I can't remember, maybe it was Charles Schwab. Or I can't remember the ticker for Charles Schwab. CH somewhere. W. I don't know. Charles Schwab. SCHW. Yeah, CHW had like crazy relative volume. Look at the freaking huge spike. 20x average volume? Are you kidding me? 20x average volume yesterday on Charles Schwab. Like, look at this absurd reading. Haven't seen anything like it in years and years and years. So anyway, so some of these tools I'll use for that, you know, and they're up on my chart because I'm looking at them in a different lens. But like I say, generally speaking, just VWAP, standard VWAP, my daily VWAP, is something that I'm going to have on, you know, on a 5-minute chart, on a 15-minute chart, whatever. I always kind of want to know where price is relative to VWAP. And in the way that I'm thinking about that on a small time frame, I'm thinking about distance from. So anytime you get an overblown move, like something like this, what's that? %, wild. Whenever you get a big overblown move, prices really deviated away from the VWAP. You know, you can backtest these sorts of things looking for mean reversion trades. And so like in tandem with VWAP, with price getting super extended away from VWAP, we'll have RSI up, or I'll have RSI up, and I'll be looking for where price is where price is starting to change its tone. Didn't really happen here on Schwab. But if we can look, if we can find instances where RSI is starting to show divergence, and we've got price a good distance away from the VWAP, that's going to give me a little bit of a signal as to the opportunity or the chance for a reversion trade. Like you got right here, you got to bounce back into VWAP. So you could potentially land that reversion trade, or you could potentially fade the move back into the VWAP. What's up, Sonia? Good to see you. Haven't seen you in a minute. Hope you're well. Yeah, I try to keep things really, really simple. Basic volume, volume weighted average price, RSI. For me, like you guys know, for me, it's all about levels. It's all about price levels. And what did price do at these levels? There's a good example right here on Schwab. Coming into lows, potentially going to reject here at these lows. We'll see. I'm not saying it will, but it could. But the fact it broke these lows, that sets up some expectation for what could happen up here. You know, what does it do? Does it gain these lows very quickly? Does it get rejected and consolidate below them? Does it continue making new lows? If it gains them really quickly, my thinking is different than if it consolidates below them and then gains them, or consolidates below them and then fails. You know, there's lots of different setups out there that you can play around with. I mean, you could even test just like things like this, right? You could test and see Charles Schwab at RSI 14. That's pretty fun. Let's do that real quick. What's cool about TrendSpider, and I mean, maybe I'm a little partial, but we can test this stuff real quick. RSI below 17. What happens two days later, historically? Has it ever even been below 17? Who knows? 3 times. 3 times it's been below 17. All 3 trades were losers 3 days later. So that doesn't build confidence, does it? It's not much data to pull from, but it's still kind of interesting. I wonder when the last time this happened was. Yeah. So here's the last time it happened was COVID lows. So here's your below 17 reading. Here's your entry, and then 3 days later you got out. So they scooped the low 3 days later. Maybe the trick is like, or 2 days later, sorry. And maybe the trick is get out after 1 day. Yeah, even 1 day later, you're still a losing trade. Interesting. Yeah, I like doing that. I like doing things like that. Whenever you see big anomalies, actually, I can just double click here. Whenever you see big anomalies like this in a chart, whatever it may be, it could be a price anomaly, it could be like a move, a huge move up, a huge move down, or some sort of indicator anomaly or something. All right, Murder, take care, man. Have a good day at work. Don't work too hard. I like to backtest those anomalies because those anomalies can be really interesting opportunities, right? Anyway, guys, my time has come to an end here. I'm just about ready to rock and roll and get out of here. Any questions before I get out of here? Robert, man, that is awesome. That means so much. That makes me feel so good. All I want is for everybody to walk away with a little something. Jeff, great pleasure being here with you today. Thank you for your questions. Hopefully, do you feel better about Anchored VWAP now? Do you feel like you got a little bit of better grip on it? Yeah, Jeff, I tend to chart with extended hours off. I do. Because extended hours, for the most part, it's just noise for me. I pay attention to futures. I'm pretty much a futures trader. I would characterize myself as mostly a futures guy. And obviously futures trade 23 hours a day or whatever it is. So I say that on regular tickers, I keep extended hours off, but I'm a futures guy, so I'm always looking at extended hours. I use futures to gauge everything else. You know, if I'm interested in taking a trade on Apple or Tesla or something, I'm going to be watching NQ. It's probably because of something I'm seeing on NQ. That's just how I roll. But generally speaking, I just have the sense that the people with the real money out there are more interested in daily opens and closes than they are in the extended hours opens and closes. Those extended hours levels, if there's a weird opportunity, I mean, they do hit, but it's just, you know, the volume piece. I get kind of concerned about lower volume moves, just generally speaking. Oh, shoot. Happy birthday, Robert. What are you doing for your birthday today? Are you doing anything fun? Hopefully making a bunch of money in the stock market for your B-Day. Okay, so they just took out highs. Be interesting to see what they do here. They just took out highs and they're selling it off. We've got 27 minutes to the open. Man, that 786 trade. Holy moly, what a monster. Robert, you're chilling. Right on. Well deserved, sir. Enjoy your very chill B-Day. I hope you get to do something fun. Go outside, take a walk, perhaps. Go get a nice dinner somewhere. Enjoy being alive for another year. It's a blessing. Another revolution around the sun. All right, y'all. Well, again, such a pleasure. Jeff, I'm so glad that that helped you out. We're going to, getting snowed in. Nice. Maybe do a little snowshoeing, perhaps. We are live here for the foreseeable future. We are live here Tuesdays and Thursdays, pre-market. And I'm no agenda, you know, no rules to these shows. We're just here hanging out, talking shop, looking at charts, answering questions that you guys might have about the platform. So, you know, anytime you have questions, do feel free to tune into these shows. Anytime you want to take a look at a chart, you want my thoughts on it, I'm happy to, you know, take a look at something for you if you're interested in that. Happy to explain any TrendSpider tools to you guys. What else? We got something coming down the pipe tomorrow. So keep your eyes on either our website or on our Twitter account. We got some things going on. It is St. Patty's Day tomorrow. Is that tomorrow? Or is that like the 17th? I don't even know when St. Patty's Day is, but it's coming. Oh, it's Friday. So St. Patty's Day Friday, I will be live again, like I said, on Thursday. There's a chance we might have something going on Twitter space wise tomorrow. I need to reach out to some folks and see who's available and see who wants to gab it up with me. We got some things going on this week. So until next time, it has been such a pleasure hanging out with you all. It always is. And thank you for being here. Thank you for spending your pre-market session with me. I appreciate it. Hope you learned something. And again, if you have any questions, tune in on Thursday. I will be back same time, same place. And if you have any questions between now and then, my DMs are open. You can always reach out to me at Krutzky Trades on Twitter. I am more than happy to help you with anything that you need help with on the TrendSpider platform. So holler at me. Do not be a stranger. Give me a follow. Say hello. And also, you guys, please like and subscribe to the TrendSpider TV channel. That way, you guys will always know when I'm live. I might, at some point in time, start going live randomly when things are exciting and important. So, make sure you like and subscribe. That helps me out personally. Truly, it does. So please do that. Again, okay, I'm out of here. Enough lollygagging. Enjoy the rest of your day. Trade 'em well. Robert Brush, happy birthday, sir. And we'll see you guys all on Thursday. Take care.